All right, everyone, welcome back to the channel and welcome back to Beyond the Headlines. I think we're on episode 18 now. I messed up and I said last week was 16, but it was 17, but we're moving along. Now, if you're new here, this is where me and my co-host here, Steve, we take a look at the headlines of the week, but we are systematic, we are quantitative, we are technical in nature. So we like to look at what the headlines are saying, but then go in and see if the chart is confirming what's going on there with the overall headline. Now, this is a shortened week. We had a July 4th, happy Yankee Day for all you guys down there. And then we had July 3rd, which is a half day. And then now Friday, it's not a lot going on in the market. So the headlines are pretty light, but we're seeing kind of a theme go throughout. And that theme is talking about energy and things that are happening on the energy front. So we're going to kind of focus around there and take a look at that, as well as at the end talk about some ideas and things that we had spoken about in prior episodes and kind of update you guys on our thoughts of those right there. So, all right, Steve, how's your week so far? Did you I see
Ugh,
you have all your fingers. You didn't blow any off with July 4th?
I was asleep listening to the booms in the bed because I decided to travel in a germ tube up to Oregon last week, as I mentioned in the and it got me right after we did the podcast last week. Killed me. So I've been flat on my back for a few days. I've not been trading. I will give you this. One of my steadfast rules is when I trade, it kind of messes with my head. And I'm sorry, when I'm sick, it kind of messes with my head. Therefore, I don't put on a lot of risk. I don't do a lot of trading. It just, my mind is clouded and just still coming out of it. So, welcome.
That's smart, and that's a tip I got way back when I started trading, when I was day trading. They said, listen, if you're not feeling good, you had a big fight with your significant other, anything that's throwing you off keel, just don't, because you're gonna make it worse with the market. You know, it's the whole you can't
You're
have a
just
healthy.
opening the doors to be more emotional, which is what you don't want.
Yeah, you'll go on tilt, you'll miss things, you'll just make little mistakes and things like that. So no, I 100% agree. Take the days off. If you have any positions, keep an eye on them. But just don't enter anything new. Or if you do, do it
Yeah,
like, a third of the size or something.
basically, I woke up and looked at my portfolio and just started putting in stops, so I did not have to make decisions. It's simple.
Smart. Yeah. Yeah, so we're going to talk a lot about energy and different things that are happening here. So one thing, and I thought this was kind of funny because we talked about coal a little bit on one of the episodes. It looks like this isn't the first M&A deal that I've seen come through with coal, and this one's a bit special because TECK here, is a Canadian company that's actually gotten now purchased by a U.S. company in the coal mining space. You can see the monthly chart, this thing's been on a tear recently. On the weekly chart, this thing's been on a tear. And the reason we talked about this and when we were talking about headlines before, I don't know if you remember, Steve, but it was all about ETFs listing and delisting and how the coal ETF delisted. If I go to the monthly chart, they delisted the coal ETF because coal stocks were in such a bear market right in this area right here, right before they started this massive boom. So we are seeing some M&A deals in the coal ETF. I wish there was a coal just underlying ETF that I could trade, but it seems like there's some energy going on here. So do you have any thoughts on this? Do you have any coal stocks that you're looking at or that you like to trade?
I have not been looking at any coal stocks. I haven't even begun to. Um, so I don't have much to add there. I
That's
was
fine.
I was going to talk about the modular nano nuclear stuff when you're ready,
Yeah,
but
we'll
I don't know
get
if we're there yet.
no, we'll push over to that because again, it's all this kind of this through line of the fact that everything when I was doing my research and I was reading the news and I was talking about this, it's energy, energy, energy. So it seems like coal may be coming back as a temporary energy source where when things get going. And I'm going to go over to Steve's screen here because I think he's all set up. And we're going to talk. This is something we've been hammering a lot on, and, just so to be clear, it's not to talk our books, it's because we continue to see this theme come up. So let's go over here, over to your screen, Steve, and tell the people what you're seeing on SMR and NNE.
Well, it's funny because we literally kind of had the genesis of the introduction to SMR on this podcast. It was back around this area. We started
Hmm.
watching it. Um, Matter of fact, I think actually, yeah, it was, and we started watching it around there, and then it was this date right here, this little mess that came through. Why is my oh, I turned my clock off. Hang on a second. Let me get those to disappear. Um, these two red days were the day that the iceberg newsletter came out. And in hindsight, I'm starting to just think that newsletter was basically used for somebody who wanted to get in and didn't want to chase it. And because all it's done since then is ride the 20 SMA. And now it's getting a little bit more parabolic y, if that's a word, on
Hmm.
the 10 SMA. And this has been a wonderful trade around. Again, I was lamenting the stock back here, but since then, my trade arounds buying off of the trend lines and selling on strength, I'm net way positive in this thing. This thing has really helped grow my account in the last few weeks. So, aside from the fact that it's a wonderful trade around opportunity at 18% short and a decent float of 80, we had another one come into play, NNE. And again, this one is extremely nasty. A very small float, 15 million. I was doing the same thing. I was buying down here and flipping up here. I tried to mess around here, but I never really got the entry I wanted. So that was a scratch trade. So I've got one good trade around, but boy, I am watching this thing again for a possible reentry. Now, what I want to get at is kind of an epiphany I think that came to me. Again, these are nanonuclear energy, or in SMR's case, small modular nuclear or reactors.
Hmm.
What is this? As we all know, as we said before, it takes a decade or so to permit and construct a full scale nuclear facility. It's not easy. And small modular reactors are things that are kind of like a modular home. You know, it's all done in the factory and dropped onto site and connected and go. And these things are providing, I think, some really interesting promise for people who realize that nuclear clean energy can be a way to go. But here is where it gets interesting. As we all know, what is the reason that basically NVIDIA can do no wrong? Well, data centers, AEI, tremendous amount of processing power needed. Power, how do you get processing power? You get it from power. And I'm starting to think that the actual story here on these types of plays, and again, all I have is SMR and NNE. Those are the two main ones I'm following. I'm looking for more. But I firmly believe the story here is these things are going to help get data centers for AI up and running and off the major power grids and on their own private sector grids. I really feel like that's kind of what the euphoria is. Again, I'll go
Yeah.
back to the horrible newsletter that came out and brought this thing back as it got ahead of itself. Well, somebody took advantage of that, and they've been buying the dip ever since. NNE again is a newer issue. It's not as much trading behind it, but boy, this thing can really get going. And this is an interesting looking pattern. So it's kind of a new revelation for me. It's a new sector. There's always new sectors being born all the time, whether it's security, nanotech, biotechs, you know, certain fringe type of technologies. In this case, we'll just call it an offshoot of, you know, the green energy. Um, and I think it's going to continue to play out with the euphoria that people are looking for, like they did with NVIDIA, in being a solution for this incredible AI surge that is now taking over.
Yeah, and if we take a look, I found I found a headline there that actually just came out on July 1st, so earlier this week. Just tech industry wants to buy. So basically, this article I read a bit of it is just saying that there's a lot of these companies that are approaching nuclear power plants directly and saying, "Hey, you know, we're going to build this giant AI data center. We want to hook directly up to you and get our power if you can get some sort of discount rate or something." So the idea is that they don't want to buy from the normal grid because AI is going to suck up so much juice. They want to see if they can get that right from the fountain. And this is I think it's a great example of how traders generally think about these stories when they come up. Is you generally have the first movers, and in this case, it's obviously Nvidia. This was the first mover when it came to, taking a look at AI because they are the ones who are building the picks and the shovels for AI. But there's generally, if you're going to have something that happens this big and moves this strongly, you're going to have offshoots and industries created. And the most recent example I can think of is you have Bitcoin. So first you have Bitcoin, and if you want to buy and hold Bitcoin, that's great. And then that was in the beginning, if you were early to it, that's where the best return was. But ever since that first massive spike, from, basically 0 to 20,000 that happened in 2018, there's been a lot of other plays around Bitcoin that have made you way more money and a way higher return. So, the Bitcoin miners, for example, would have these multi-month periods where they would double or triple. And then sometimes you'd have something like Coinbase that, came out of nowhere and had some great trade potentials on it. So you're as a trader, and this is what I think Steve was highlighting, I think it makes so much sense, is you have the initial idea or the initial premise that comes up. In this case, it's AI. If you're chasing Nvidia here, even though yes, maybe it can go up another 20, 30, 50% from here, right? Maybe it's not done yet. But from there, if you can find the places that will benefit next, then you can have a trade as well. So the idea, and this, Warren Buffett always called this the second derivative play. He ended up, when wind energy started to take off before it was a thing, he bought railroads. And the reason he did that is he said, well, this is a railroad is the only way you can really transport these giant fans that come in the wind energy. So instead of chasing the initial, he said, what other things have to benefit? So what Steve is saying is that, okay, you have AI. If you want to play AI directly, you've got Meta, Nvidia, and all these. But that, I don't think Nvidia is going to double again from here and become a $6 trillion company and be, bigger than half the world. But if you can find out how they're going to power this and go into the smaller companies and take a look at those, that's when you have things like SMR and NNE that could benefit as we talked about with this headline right here, as we look to power this. What is the second derivative? What is the third derivative? Those are the things that you can potentially play, and they still have, like in that Bitcoin example, they still have much more room to move than potentially the initial idea.
Yep.
And the other
Sounds good to
thing,
me.
the other thing I wanted to look at quickly, I want you to go back to your SMR chart if you can for a second there, Steve.
Well, I stopped sharing. We were getting a little wonky, so let's use your
Oh,
chart.
okay. No, I can do this here. And I want to do this because I get the question all the time of what moving average to use, right? And Steve has a couple that you see on his chart all the time. I think a good way to go about doing it, if you're kind of confused on it, is look for which one's working the best. And that's one thing that stood out to me when you took a look at this SMR. The 20 period moving average, just over and over and over again, was doing fantastic. It was support here, it was support here, it was support here, it was support here. Sometimes I think you need to take a look at the character of the stock, because something that's way more
Mhm.
volatile will probably respect a shorter term moving average like the 10 a lot. Something that's way slower, you might want to use like a 50. In this case, it looks like the 20 is a really good play off of here. So I don't think there is a perfect moving average. What I think you probably do is like Steve does. You have a couple go-tos, and then you look at which the price is respecting. Because what we're doing is we're trying to pick up on where hedge funds and institutions are going to look to buy this, right? Hedge funds aren't going to be buying as the thing's way up here. That's just, they would instantly get fired if that was the case. They're waiting for something, an anchored VWAP, a moving average, some sort of area on a pullback in order to buy. And that's what they're looking for, is to try to close that distance and to purchase at a lower price. So yeah, to answer the question that we get all the time of what moving average you use, I'd say it's which one is the stock that you're playing. What one does that react to? And then, maybe go with that.
You don't have it on there, but the 10 is really what held that that latest pullback, and that is the trade around I'm currently offering, and I would love to sell a chunk of this at 1234. I've got an offer out right above that prior high. My thought is I want to get rid of a third of this while I can, and if they want to go test highs, they've got to go through me first to get it. So I literally bought right on that 10 SMA 3 days ago. I've had zero pain in this trade.
Wow.
And I told myself if it breaks and closes, I'm out and I'll just pick it back up at the 20 like I have before. But what it's showing me now is it's starting to lift off with some additional momentum. And now the 10 SMA, which I call a momentum line, is holding it. And hopefully, I'd love to see a price of 1234 while we're speaking. That means I'm taking profits.
Well, let's see. And for me, again, my plan remains intact. I am letting the new indicator that should launch next week or the week after. Um, this go no go indicator, as long as this is in a strong trend, I'm going to try to stay with this one. And the reason for that is really we haven't been in a good trend since after this initial IPO hype, and we've come back down through. Now, if we can get to these highs, I love IPOs because there's nobody stuck. Right? We look at things like GameStop and Chewy and all these really beaten up stocks that they have their flash in the pan, they have their moment in the sun, um, but there's all these bag holders. So every time an AMC or something spikes, there's somebody who's down a lot of money who's waiting for their opportunity to sell. When you're trading IPOs, and this is why we have a whole scan devoted to IPOs that are making new highs, is because A, there's been a couple studies done that buying IPOs as they break out to new highs is profitable over the market. But B, I know that there is nobody underwater. There's nobody. If we get through this high, I know there's absolutely no way that anyone could be losing money on this stock. So that makes the sentiment behind it very, very simple. So that's my idea there. Now, lastly, on the energy front, we have oil, and we have oil hitting 2 month highs and on quite a trend here. So, if we just quickly go and USO is probably the best way to take a look at that from the simple ETF. And I want to first look at XLE. Let's start there. So, XLE is just the energy sector as a whole. If you take all the different energy components, this is where XLE sits. And you can see, although, okay, if we go into the monthly time frame, right? Nice push up here in the beginning of 2024. Let's go, I don't know, 5 year and take a look. Take a look a little longer term there. Um, nice. It's been a nice trend for XLE. Uh, However, over the last, call it couple weeks, a couple months, we've been pulling back here pretty strong on XLE. However, if you look under the hood and you take a look at USO, we're hitting new highs, actually breaking out kind of as we speak, and we're hitting these new highs right here. So oil has been very, very strong. Again, showing this energy as well. The US is, I guess, drawing from its stockpiles, which it had rebuilt all the way back up when we were kind of down in this area. And yeah, oil hitting new all-time highs. So I don't know if this is carrying the same theme as holy smokes, with AI and with all of this, we are now using more energy and we need to get more energy, but we're seeing it from coal, we're seeing it from nuclear, we're now seeing it from oil, which really makes me think that that's potentially the theme going into the next few months is sectors and oil stocks and uranium and that type of thing as a whole, which would be very interesting. And this is what I want Steve's opinion on, because that's a massive flip from the beginning of the year, where essentially if you didn't own big tech, you weren't making any money in the long only portfolio. Now it seems like we're potentially having a move over into these energy and alternative energy sectors. So other than AI, or other than these nuclear reactors, Steve, uh, do you have any go-tos when it comes when you start to see oil or you start to see energy move? Do you have any go-to places?
I really haven't, and maybe that's because we're identifying this shift here early, and I need to start maybe getting some more ideas. I will say it's absolutely ridiculous to have to deplete our strategic oil reserves and then buy it back at a higher price. I think a kindergarten teacher could probably argue a good case against that as easily, but
Well, and
that's where we are.
it is equally strange with being I think one of the largest net exporters in the world right now. The U.S. is, and then same with Canada, right? If you look at it's, um, and I just know this because I'm Canadian. Is it XEC? I can't remember the Canadian ETF right now.
Can't
Uh,
I can't remember. Is it EWC?
EWC. Thank you. Yeah, you would expect us to be, as Canada essentially being mostly gas. We're not as strong of a net exporter as America, but we export gas. We are still stuck below all-time highs. So this could cause a little bit of a switch when it comes to, again, what we're looking at. So that's my kind of, hey, keep in mind, if Nvidia is going to continue to just chop around where it is, where I think it may, if the crowdedness of the AI play when it comes to the big tech gets, that boat gets a little bit too crowded on one side. I think you go down, you say, oh, well, who has the best to benefit from this? XLU, for example, utilities, has actually been doing amazingly in through here. So just keep in mind, right? I know a lot of people get stuck on the mover of the day or the mover of the de jour, which has been NVIDIA for a long time. But I think to summarize, what me and Steve are saying is that even if AI is going to continue to be a thing, these guys might be a little bit overdone, and it might be time to start looking a little bit under the hood. Now, speaking of overdone, before we leave, I think we do need to quickly take a look at Tesla. I'm actually going to go over to my other screen here so I can zoom in a little bit. And there's one last lesson, I think, in Tesla, because last week, TSLA, I am dyslexic. There we go. Last week, we were talking about how this little trend line break right here, let's just delete some stuff to make it easier. But this trend line that we were looking at on the way down, this downtrend line right here, had been broken, and we were reading negative news articles. How everyone was saying that they weren't really happy with their EV and that they were going to go with another vehicle each time. And me and Steve just looked at it and said, well, if that article and those articles were very impactful, then you would think that we would have some sort of down move in Tesla. And it doesn't look like that's what's occurring at all, right? That we were holding up in through here. We were holding, Steve was talking about holding over the 10 and holding over the 20 and how these were looking strong right here. And then this week, they beat deliveries. So they sold more than the market thought, and just an absolute ripper. So, again, just another lesson, I think, on it's not about the headlines, it's about how the stock reacts to it, which is why we made this series and why we named it what we did. Is that you see a bad headline, but you see no down movement in the stock, could be a good buy, and vice versa. If, all of a sudden they said, oh, Tesla's sold more than they ever thought they would, and everyone's super happy with them, and isn't Tesla great, but the stock doesn't go up on that news, then maybe it's time to look to fade the other side. You have any comments on Tesla here, Steve?
No, it's done extremely well, and honestly, it's probably ready for a bit of a pullback, a bit overbought here. If you were, don't be the guy or the girl running in and buying this chart right here. You see all that green behind you? You're just asking for it.
Yeah, just like we talked about with SMR and everything, we're trying to always, our whole jobs as retail traders is understanding that we don't move the market. Our job is to ride the waves of the institutions. They're not buying up here, right? Even if the largest hedge fund in the world says, I love Tesla and I think Tesla is going to triple over the next year, there's no way that they're getting their trader to buy it up here. They're saying, hey, I need you to buy, a couple million shares of Tesla. They're waiting for pullbacks. They're waiting for sneaky moments in order to get in. They're going to wait for bad news that spikes the stock down. They're going to be buying there. The large institutions are very strategic about how they get in, because if you're buying a million shares and you miss it by a buck, you've just lost your investors $1 million. So make sure you're thinking like that, right? Don't FOMO into these things. I'm going to be watching for some sort of a pullback. I think an obvious. I know Steve will probably be watching the 10 SMA. For me, I'm going to draw an anchored view app from this breakout candle. If we can pull back into the kind of the 215 area, I think that might be a look. But yeah, I'm not going to chase something up this much in a row, because you're probably going to be the guy at top ticking. So thank you all for watching, and if you have gotten this far, please hit a like, especially for Steve being a trooper and sticking it out, coming here when he's not feeling well, right? I think that deserves a little bit of a like and a share, if absolutely nothing else. The warrior came in to make sure you guys have your entertainment on Sundays. I'm sure there will be nice comments, Steve, to get you to feel better, but I'll say it here as well, right? Take your rest, take your zinc, drink lots of water, that kind of stuff. Um, Definitely, I hope you're feeling better next week.
I'll feel better here if SMR just prints a couple more pennies higher and takes me out. I'm getting so annoyed with that, I might just have to adjust my order and take what I can get. I think I just might do that. Change order from 34 cents to 30. Oh, there we go. I got taken out before I could even change it.
Well,
One
there you
third
go.
off the table. That's how you do it. Paying myself while I'm sick.
Yeah, exactly, right? Most people have to take days off, right? We get to ride trends regardless of what we're feeling when we get those trends. So listen,
All right.
thank you everyone, right? Give us a like, give us a retweet, a share, or whatever it is you're seeing this on.
Chart request.
Chart requests, make sure you're requesting if you want us to take a look at a headline or a chart. Definitely put that in the comments below, and we'll see you next week.
All right. Bye.